Testing. Good morning, everyone. How are we doing? Welcome, welcome. Good afternoon, good morning, wherever we find you, whatever time of day it is. It's good to have you with us. I'm JJ vwaptrader1 on X, and this is tradingsyndicate.org for Thursday, the 19th of February, as we barrel through this month. Hey, Timmy, Hex, Stealth. We're going to be doing a shortened session today, my friends. I'm off to the cardiologist, so the session's going to be about 45 minutes. We'll get you set up, we'll set you going, and I'll make up for it tomorrow. It's going to be a quick one. Hey, Taylor, how you doing? What's up, Ronan? Stealth. Good morning, good morning. Good to see you guys. Thanks, Taylor. Yeah, it's just when you get old, they got to keep track. They got to monitor you, right? Make sure all the plumbing's working. So we're going into this day, and they should be happy. I've lost 44 pounds, so still got another 10, 15 pounds to go at least. But they should be happy. Hey, Kevin, what's up? What's up, Sparky? Let's see what we're shaking out here. Now, I said earlier in the morning that we're not moving up as fast as we usually do. The last time we looked below and failed 67.88, it took us basically 3 days to get back to 7,000. Here we're seeming to find that there's a bit of a seller, and the market is not reacting as quickly to the upside. Now, this is an interesting fact, and it's telling me that, you know how things change all the time in this business. We could be looking at a little change, right? So we have to prepare for that. So far, we have an inside day. We're inside yesterday's range, right? So that's kind of business as usual. What we're going to look for is we're going to look to see if yesterday's low holds. If that breaks, hey, Zeth, how you doing, brother? If yesterday's low breaks, we're going to look for that 69.44.45 level. Okay? And that's going to be a swing low. And if that low gets taken, then we'll come back down here. Now, we didn't actually trade at 67.88. We came down to 67.90 and change. So I'm not sure. When you do these rotations, right, you should rotate down, then rotate back up, then rotate back down. But if we hit a wall here, we could get another rotation back down. And that's what I'm trying to see. This low here is going to be sort of the trap door. If that low breaks, then this candy will start to fall out, and we'll go test the lows of, I think it's the 14th this day, 14th and the 15th. So let's keep an eye out for that. And we're going to trade just back and forth. See how the market's, we're 68.69 right now. Our overnight low is 62, right? So we're close to the overnight low, right? That's why, and I'm seeing sellers. Now we're going to go dig in a little bit, right? So now we know the map of the city, right? We know where we are. Let's say this is the map of the state, right? We know where we are in the state. Now we're going to go, we're going to go and look at the map of the city within the state. Hopefully this helps you guys visualize. Now, in the city, we're down here, right? We've got this overnight low down here, and the overnight low came right down, and it stopped, what is it, one tick from the previous day low. Now, market profile folks call that a weak low, right? And what does a weak low mean? It means that everybody sees that low and they start short covering right there, and the market rips all the way back up. And that's great. But now what happens when we go and we hit that low with some serious volume, right? I always say, you'll see me in the old days, I would always say, okay, this is the low, size breaks it. So what does it mean when size breaks it? If I come to that low at 68.62 and I show it 5,000 contracts, it's going to fold like a house of cards. Because nobody's going to buy 5,000 contracts at that price. Do you guys get what I'm saying? So let's look out for that. Now, if that low does not break, we'll get rotation back up because overnight inventory is short, right? Remember, overnight inventory is short, but we do have some sellers, right? We trapped all these people long yesterday. Yesterday's point of control, the cost basis of yesterday is up here, and we haven't been able to get into that cost basis. So there's been downward pressure on the market kind of all night. Now, it's had some nice moves to the upside, right? Cisco took a nice trade. What I'd like to do when he wakes up, because he's in Hawaii right now, and it's, 3 in the morning there or something. When he wakes up, I'm going to ask him to do a video with me on how he executed that trade. It's always good to get a fresh perspective on trade management, and I want to see how you guys do it because he's one of our larger traders in the room. So I want to see if there's anything that you guys can use from his methodology, right? Yeah, so it's 4 in the morning in Hawaii, so he's sawing logs, right? So let's see what we're going to do here. Now, I got to say I'm short biased. I don't know if I'm short biased because maybe I've been watching, a little bit too much news, right? And there's some rumblings about, stuff going on in the Middle East. But that happens, right? So it happens. Hey, Raj, how you doing? That happens when we go into these things. There's all the news seems negative, right? So I looked at the pre-market, looking at old Microsoft in the pre-market. It's struggling to hold that 400 level, that balance level. Let's see what happens, right? Too early to tell. Leather jacket guy and NVIDIA is just back and forth in this blue balance zone. We break above it, come back in. Break below it, come back in. Right now, we're kind of in the middle of it, so not much to do there. Good old Palantir caught a bid here at 132. Goldman being Goldman, they're hanging tough over 910, no problem. Google, a little bit of steam control after they hit that 348 down to 301. But there's still gaps and shorts that are trapped underneath 299. The Amazon rainforest, just back and forth. I haven't been watching that stock. Crabapple, when it came down to 245, it caught a bid and bounced. Bounced real high all the way up to 280 and then backfilled. So you can see Apple is just, it's holding that level right there. You know, once again, these stocks are fairly thinly traded compared to the amount of stock that exists. So let's see what happens, right? Let's see what happens. I'm looking for a break of that overnight low and the previous day low. And if we do that, there is an untraded point of control. There's a cost basis down, where is it? Where is it? Here. Aha. This is the cost basis from the 17th is down here. Okay? So we've been taking that cheap stuff from the 16th and 17th. Remember, 16th was a holiday. So the 13th, the 16th, the 17th, we've taken that cheap stuff and we've blown it up out here, here, and now we're right back to that cost basis. So let's see, as they say in Canada, let's see what they got in the tickle trunk when this market opens. I'm seeing offers. How am I seeing offers? Because I'm not looking at the DOM. Well, folks, I'm seeing offers because I'm seeing sellers. Now, everyone goes, JJ, how do you know that there's sellers? Well, because the chart's going lower. Right? You can see that the sellers were here, then they were here, right? And then they initiated here, and then they initiated here. You see? So now, you fancy folks would say, okay, that's a trend line, right? So now you know why there's a trend line. A trend line going down means that sellers are competing. A trend line going up means that sellers are lifting price because they see buyers. That's what creates a trend. So when the offer is moving lower and you're short, that's a beautiful thing. Now, my cost basis was up here at 68.95, 3/4 to 99, and you double it to 87 discount zone. The 4 times discount zone is 71. And now we're in 8 times discount. So let's see if not putting on the Ritz, if we put on a big discount, is that going to bring buyers? Because usually in this market, every time we discount price, they come in hot and heavy. But now with all this AI gobbledygook, 1, 2, 3, 4, 5, 6, 7. Do I have 8? Just double check this. 1, 2, 3, 4, 5, 6, 7, 8. Okay, I got 8. So ultimate target would be 68.39 3/4. Right? If we get down to 8 times discount. Let's see what happens. Now, inventory is short. Session inventory is short. The cost basis before the move is around here at 68.58. What are 2-point increments? No, you do a cost basis and then it's a discount. So it's cost basis times 2 times 4 times 8. Right? And I do it every morning. So if you came into our room, I'm not sure how to pronounce your name. Theo Philemity? Thanks for being with us. If you come into our room, we show you how to trade using cost basis. Now, if you're a trader, right, you should kind of know where stuff is priced, right? So you know whether it's trading at a discount or whether it's trading at a premium. Like, so if you were selling spices, or if you were selling rice, or if you were selling hair extensions, or if you were selling, leather coats, you need to know where everybody else is pricing their inventory, right? Because it's a market, right? That's why I use this method of trading, because it works. And you'll find it's insanely accurate because markets are about order flow, inventory, and inventory has a cost basis. How much did we pay for it? Are we marking it down? Are we marking it up? Right? The chart that you're looking at is a sales chart. And it tells you how sales are going. Are sales good? Are sales bad? Do we have to put this crap on sale to blow it out? Right? Because nobody wants to be holding inventory and tying up capital, right? You guys understand that? When you take a trade, you take money and put it on the table. That is capital, right? You don't want to tie that capital up for too long unless your trade, well, unless you have a lot of money to hold that trade and you have a lot of conviction in that trade, right? So if you're trading, if you're day trading, right, your convictions, just as long as it has to hold just and long enough for you to make money, right? That's why everybody goes, JJ, what's acceptance? Well, the market profile guys say that acceptance is 2 half-hour periods. Now, I've never held a trade for an hour. Well, I have, but not lately, not with 120-point ranges. So I like to get in and out. So for me, acceptance is 30 seconds to about 3 minutes. That's all I need to get my work done. If I'm long, I just need a couple of minutes, maybe even 60 seconds to get in and out because I'm a fast trader, right? So let's see what happens. We're going to open up here in 13 minutes. Now, after we hit this low at 66, right, you want to look at these markets like a professional. You don't want to look at this like retail, right? So when the market starts going back up, you want to see where do they sell into it. Catch my drift? There should be a seller here. See the top of that candle? That's where they initiated. And see how we couldn't take out the top of that candle? Because they stepped in and started selling again. Now, why would they sell there again? Because that's how size traders do business. Size traders have product to move. They have inventories. So they're not trading 3 E-minis. They're trading thousands of them. So if they sold at 71.5 before, you can bet your ass they're going to sell there again unless they see a lot of buyers lining up. Then they're going to raise price up to 72. Right? And that's how markets work. It's very simple. Our trades are based around the simplicity of the business. Right? There's no need for complex trade strategies, especially if you're not making money. Because the more complex your trade strategy, when I come and put the screws to you and put pressure on you, you're going to fold like a house of cards. But if your trade strategy is simple and you've practiced the steps of the trade and you've trained yourself to get in and out of trades quickly, then you're not going to fold like a house of cards. You're actually going to be able to get out of a bad situation without losing all your money. Right? And that's what we teach you. We teach you practical, simple ways to make money. Right? So our trading room is for real people so they can make real money. Right? There's no Ferraris, there's no McLarens, there's no supermodels standing in front of somebody else's car. Right? It's just regular people, and we're training regular people how to make a buck. Right? How you can pay your phone bill, how you can pay your mortgage. Right? Through consistency, discipline, and a little old-fashioned concept that we like to call common sense. What's going on in the room, guys? You guys still awake? See how there's a seller up there at 71.25? Now, inventory is short. Oh, see, it poked its head up. You see that candle? It poked its head up. See? Look. That's the sellers there saw buyers, and they're raising price. Now, let's see if there's continuation. If there's continuation, we'll get a 72 print. A print means trade. Let's see if we can go print the 72s. There we go, 72.25. They're coming in hot and heavy. right? So inventory is starting to correct higher, right? So the trade that we would take if we were trading this is we'd be looking for a long here in these 70s. I'm a little late. I should have had my DOM up, right? Long 72, 73, and then put an offer out at 74 and see if you can get taken, right? Because you can see there's a seller right there. Boom, boom, boom. There's your seller. Right now it's going to backfill on this candle, and the seller that was here is going to step down. Right? They're going to step down until they find a bid. Then the offer is going to lift. Right? So if you buy a couple at 73, I'm going to sacrifice a contract at 74. And if nobody wants to buy my contract at 74, guess what? I'll sell it at 73 and 3/4. Right? Because I don't want to be holding inventory that doesn't work. Now, larger traders will be looking for 71 and 3/4, 72 to hold. Right? But you could see, if we were long here, we know there's going to be a seller here. Do you guys understand that concept? It's the simplest concept in trading. Right? If you know there's a seller at 73, go sell it. And it's an aggressive seller at 74. Right? So move your offer down. Right? Get taken. If you can't get taken, if they can't buy one measly micro off you, that means there are people ahead of you in line. Right? Make sense? Yes? No? Right? So, you're out one at maybe 73 and 3/4. Right? You're offered at 74 and 1/4 now. Let's see if we can get taken at 74 and 1/4. Right? And if you can't, that's telling you about the pricing at this time. Right? So I sold one at 74 and one at 74 and 1/4. Not the greatest trade, but I'm testing to see whether or not that offer is lifting. Make sense? So I went long at 73. I was high. I should have been long 72. Right? So I was long 73, sold one at 73/4, one at 74, and one at 74/4. Now you're saying to me, JJ, that's not a lot of money. Of course it's not a lot of money. Right? I'm not an idiot. Right? But I'm testing the market to see whether those offers are going to come tumbling down and whether the sellers look. Now, if I hadn't sold my contracts at 74, I'd be getting stopped out right now. Do you understand? Does everybody understand the sequence of events that led to that trade and why I got out of it where I did? That's what we call common sense, right? So you make a point. Maybe you make 3 ticks, 4 ticks. At least you cover your commissions. Because if you had your stop at break even, what's the point of doing business? Because having your stop at break even doesn't even cover your commissions. So you're just trading to lose money. Right? Would I have loved 75, 76? Hell yes. Now, if it holds 72 again, you could maybe take it. But I'm going to wait and see what happens when the market opens. Right? Maybe I'll go long 74 and a half, 75 up to 77, 78. Right? Might attack it that way. But I want to see where those sellers are before I go long. I don't see a short yet until we get under 71 and 3/4. Because the inventory, the short-term inventory, is underneath us. It's here, right? So if I went for you volume vultures, if I go and draw a volume profile, right, from the top of that candle down, you'll see the position is now underneath us. And there's a little position here. That's why we're encountering resistance, right? But you don't need volume profile. All you got to do is look at the candles, right? It's really ridiculously simple, right? Now we're seeing some bids, right? The next seller should be up at 75 and 3/4, right? But there's still some selling competition here. You see? We go above that white line and come back down. Go above and come back down. This is trading. This is how people have traded for hundreds of years. Before Windows 95, there was no charting software, right? Before Windows 95, trading software looked like Atari Pong, right? So there was no footprint charts, nose print charts, bubblegum charts, right? Itchy and scratchy charts. None of that crap existed. So how did people trade for hundreds of years, right? They looked at a level and they stocked that level. So if you're looking to go long, I'm not going to go long until we clear the 75s, because then we've cleared out the sellers underneath. Know what I mean? So once again, folks, it's going to be a short session today, right? I will be shutting down at 9:45 because I got to run out to the hospital for a cardiologist appointment. So I want you guys to trade smart today. You can see there's a seller. This is why I'm short biased. Even though I took that long trade, I'm a little short biased because I see they're selling. I see them stepping in. I see them lowering the offer, right? So they were selling here. Now they're selling here and here, right? The 1-minute candle chart, right? Whatever time frame you're trading, right? A simple candle chart with a couple of straight lines is the best tool you have. But you have to be able to concentrate. Now we're going to come down to that 70 and a quarter. Now let's see if we catch a bid at 70 and a quarter, right? On the open, if the order flow is slow, and what is order flow? Order flow is just flow of customers coming into a market. So if that order flow is slow, it might go back and forth in this range, right, before it takes out the overnight low or fails to. Be prepared for that, okay? There's still a lot of uncertainty because over the weekend, over the long weekend, they were pounding the drums on AI ruining software as a service companies. So let's see what happens. And we're coming back into this cost basis here and here. So we're 2 minutes before the open, right? What a nice trade is if we look below the overnight low, previous day low, fail and come back up, that could be a nice long back up to maybe 74, where that seller was, right? Keep that in mind if that happens. If we take out the overnight low and the previous day low, and we get underneath this 68.59 area and start taking out these stops, let the market sell off, let them pound the thing down and shake it out before you go long. Okay? Oh, there's a bid, there's a buy order, there's a little bit of short covering before the open. Big green candle, right? So we're going to open this puppy up in a minute. Remember, if you are unsure, if you don't have a trade plan that covers this specific scenario, right? If you don't have a trade plan that covers this scenario, sit on your hands and wait until your specific way to do business presents itself. Does ES lead or NQ? I have no idea. I never thought about it. I look for my trade, Theo. Right? All I care about is my trade. I don't care if ES is leading NQ or I could care less. Because I'm focused on the order flow and the subtleties of a market that I trade. I don't trade the NQ, so I don't care what it does. Right? Think about when you're crossing the street. Are you watching the traffic of the street you're crossing, or are you looking 2 streets over to see what the traffic is? See what I mean? Common sense dictates that you focus on what you're trading. Now, if you're trading both simultaneously, I hope you know what you're doing. Right? So there's that seller, right? A little choppy, a little whippy. Let it settle in. Right? Remember, overnight inventory is short. We got sellers at 72. Right? I could care less what other markets are doing. I mean, unless there's a huge cataclysmic event in one market, right? Then I care, but because it'll have margin calls. But I really could care less what the NQ does. Now, when a market goes back and forth over the open, it's not a lot of strength. I'm long 72.5. I sold one at 74.5 and the other one at 74.25. Right? I was out a little early on that. A little early. Right? And you hit that area, boom, the sellers, right? You're going to know where the sellers are if you do my method. My method is just a simple method. See, they were selling there before. They let it pop a couple of points and then they stepped in again. See? What's up, AZS? Now, if we hold 74.75, you're looking for 77. And if we take out those offers at 77, you're looking for 80.5. Does that make sense? Here you go. Told you. But there's a seller at 77. So if you're not a fast trader, don't worry. Right? Because these concepts will work in slower markets as well. And you'll be able to trade them. Practice, practice, practice. Right? And Theo, that's why I don't look at anything else, because I practice the execution on ES. I know the AS inside and out. I know when to trade it. I know when to leave it alone. I know what the order flow looks like. And it's better for me to be really good at trading one market than really being crappy at trading 3 or 4 of them, if that makes sense. I'm a very blue-collar trader, right? I want to make my money and get out. So there's some bids at 73, sellers at 76.5, a little back and forth. Right? So everything we do is based on common sense and practical business principles, right? Which is very rare in most trading rooms. They're trying to sell you a method or an indicator, but they can never understand or tell you what the business reason for the trade is. So if we can't hold the open, look for that 67 to get taken out. Watch. Well, going back and forth over the open again. It's very choppy, right? You can see there's not much direction. You guys see that? So when there's not much direction, trade only at your edge. Excuse me. Trade only at your edge and don't get sucked in to the flashing lights. You know what I mean? Right? So if you had bought 72, you know there's a seller at 74. You just saw it. Right? And if you're not fast enough, just relax and practice on the SIB. Practice your execution. You should be practicing your execution every day if you're not a consistent trader. I practice my execution and I am consistent because markets change consistently, right? So adapting to that change is difficult. You know, adapting to change in markets is difficult, right? And I'll scalp. I took a 73 long to 74, just 1 point, right? Because I know there's a 74 seller, right? So I will sell into strength. Right? And I won't overtrade this, right? I'll take a couple of trades, and if it keeps chopping, step back, Let the large traders clean this area up, because what's going to happen if we can't take out that overnight low? Say you're building a position, right? And you're building a position and you want to go long, right? Well, if you do that, once we crack that 78, 79, 80 area, right, the short-term inventory will be underneath us, and we will have no choice but to go up to VWAP to sell it. Does that make sense? But building a position in this chop is difficult because the candles are very big and you need a large account, and you need to be able to get rid of contracts if the trade is not working out. So you need to be able to bear the business expense of managing your position with size, right? So if you're not managing your position with size, right? Right, you're in big trouble. Short 66, covering 63 and 3/4, flat. Looking for that overnight low. I told you guys we're going to go test this overnight low and the previous day low. Let's go give it a tickle and see what it's got. Right, there's a little short covering. Boom, there's the overnight low. Right, there's that point of control. Now, you see how we're not getting a bid back up? We're not getting a bid back up because we trapped everybody up here. That's why building a long position here, I would have been flat at 70 if I was long. Give it some time now. As it comes back up, look for the seller. There should be a seller at that overnight low, previous day low. If not, it'll do a look below and fail of the overnight low, and that's the trade I was looking for. Oh, there we go. Remember to sell it to strength, my friends. Remember to sell it to strength. Now, this market has a very annoying habit of running out of supply when everybody goes and gets short. If we hold that overnight low, right, it's going to start correcting inventory back up. Wait for it, watch for it. Now, if you run your test trades and you find that your test trades are not working, stop trading. Right? When the market opens, you should be running test trades with micros to see whether or not what you're thinking is working. See how there's a seller right at 67 and 3/4? Right now it's going to come and test that overnight low again, and it's going to come in and dip. And let's see where the bids come in. See, I told you it's going to test that overnight low, right? Remember, if it's bidding, make sure if you're long, please sell into strength, my friends. Sell into strength, because they're going to be sellers at 67, right? Make sure you sell into this, right? Do not let the grass grow under your feet, right? There we go. I'm long. Where the hell am I long? I'm long 63 on a little size, and I'm flat, right? Big short covering. Big short covering. Right now we've trapped shorts underneath 67. Right? Let's go test that 67 and see if we can catch a bid down there. Right? Look below and fail traders. Don't get sucked into this. Let the large traders work this out. Right? Let the large traders work this out. Because what you're trying to do is you want them like a snowplow. You want them to clear the streets before you get out on the road. Right? Right? Sometimes for us, we got to sit and wait. Right? And that's okay. Right? You can see how there's a seller at 67. We were just there. Wait for those bids. It is. Exactly, Christian. The opening is like taking out the dirt, right? Please make sure you sell it to strength if you are long. Do not let the grass grow underneath your feet. Okay? If you're not a fast trader, you need to practice being a fast trader. Right? Long 65, selling 67. Ooh, I just got out of that in time. Right? Careful, careful, right? Thank you, Ed Marie. Appreciate having you with us. Now we got a little bit more selling, right? Watching that previous day low. They come in, like they're coming in down here. But if we break it again, watch for that A low to get tagged again, right? Offers out, 65 long, 67. Ooh, I just got 67. I was lucky, right? Get those offers out, my friends. Get those offers out. Let's see if we could creep back up to the open, right? And we're selling them. And we're selling them, right? Never saw a bid I didn't like. Beautiful, beautiful, beautiful. Right? I'm a fast trader. I have to be a fast trader because I couldn't have lasted 25 years in the business trading for clients if I was slow, right? You just can't, right? Now, for my look below and fail traders, right? Watch. I wouldn't go long until we clear this 75 level, right? Once we clear that 75 level, we'll start looking for, a little bit more action. Now, folks, I'm going to be leaving you in 2 minutes, and I apologize for cutting out early. But, getting to see a cardiologist is like getting to see the king, Those dudes don't really, they don't mess around. So it's tough to get appointments. Alrighty, folks. Thank you for joining us. I appreciate you guys. We'll check back in when I get back. Have a wonderful trading day. Stay out of trouble. Right? And remember, wait for your setup. Okay? Wait for your setup. Just relax. Okay? There's VWAP. Okay? Thank you, everyone. Have a wonderful, wonderful trading day. And we'll see you first thing in the morning, and I'll check in on the room as soon as I get back from the dock. Thank you, folks. Appreciate you guys. Bye for now.